morning, everybody, and welcome to the first panel of this year's Securities Finance Technology Symposium. My name is Fabian Klar. I'm the Director of Sales and Customer Relations at Delta Connects, and I'm your moderator for today's panel with the title SFTR The TR Review. As most of you know, SFTR is the Securities Financing Transaction Regulation, and nearly all market participants have gone live by reporting their SFTR SFTs to the licensed TRs of their choice. Today, we have three experts from SFTR licensed TRs that will share their view and knowledge about SFTR with us. Please let me introduce our panelists. Our first panelist is Catherine Talks. Catherine is responsible for the product management of Univista, EMEA, and SFTR repositories, and engaging with the clients and regulators and go-to-market planning. Welcome, Catherine.
Hello.
Our second panelist is Nick Larieux. So Nick is the EMEA Head of Sales at DTCC Solutions and oversees all sales efforts for DTCC derivatives and collateral, institutional trade and processing and data services. Also a warm welcome to you, Nick.
Hello.
And last but not least, Nicholas Bruce. He's Vice President and Head of Business Development at Registr. In his role, he's responsible for the sales and relationship management function, and as such, he's well versed in the EMEA, FinFrag, SFTR reporting regimes, working closely with the market participants and industry bodies in respect to both requirements and challenges that the industry face. Thank you, Nick, for being with us today.
Yeah. Hi, everyone.
So first of all, let me briefly explain how this panel is organized. So we have prepared a couple of questions which we believe are of interest for you. And at the end of the session, we have foreseen a 10-minute Q&A session. So we faced some little technical issues for now, so I hope that it will happen like this. If not, you can raise your questions anyway, and we're gonna pick them up afterwards and see how we can answer them to you directly. So we have a lot of interesting questions and obviously answers for you. So let's start with the first questions. So during the introduction, I said that nearly all of the ways of SFTR relevant market participants have gone live now. So in fact, for the UK, all of them have gone live because the NFCs will not have to report under SFTR in the UK. In Europe 27, the NFC will go live on the 11th of January next year. Catherine, how did you perceive the go live of SFTR compared to other regulations like EMEA or MiFID?
That's a very good question, Fabian. One of the things that we really noticed was the level of engagement between the different market participants and regulators and the industry bodies was really good. It was something that we saw in EMEA. There was a lot of engagement with ISDA at the time, but especially for SFTR, we have seen that level of engagement really increase. So firms were raising a lot of the challenges that they found well in advance of reporting and working through the solutions with industry bodies, which means there was a very stable best practice. In EMEA, we definitely saw a very high rejection rate for the first couple of months of reporting, but we've just not found that in SFTR. In fact, I've looked at our acceptance rate over the last 3 days and it's higher than 98%. We've had 100% on some days. And that just goes to show that firms have really done the testing. They're sending their data to the repository. Large quantities of data are being accepted. There are a few exceptions that are arising, but that's very minor in when you look at the number of reports that we are accepting into the repository. We have heard from some firms that have faced some challenges and very specific challenges. But generally, I think things have gone very smoothly, and I think the industry has benefited from the work that was done in advance of reporting. I also think the COVID extension that was granted, the additional 3 months, really helped firms. We did see a rapid increase in testing, both in terms of volumes, the number of firms, and just the amount of of positive and negative tests that we were seeing through the repository in UAT. And I think all of this has just really helped. The buy side having slightly longer to generate the reports and begin reporting to the repository has allowed them to learn from the lessons that the sell side picked up when they were reporting. And I definitely think that was something that was quite positive. One of the things that we have noticed, however, is that, quite a lot of the buy-side firms, they had to put in place procedures quite early on, because the reporting being at beneficial owner level means that, they had to provide their blocks and their allocations and break down the way that the details had to be reported. So actually some firms were reporting ahead of their phase and reporting early just because they were ready and they were having to provide this information at that time. So yeah, I think it's been very positive overall.
Okay, thank you, Catherine. Any of the Nicks something to add on what Catherine already said?
No, I completely agree, to be perfectly honest, with what Catherine said, which makes it easy. But I do think that when you look at market participants, they were well prepared. I mean, the test environments across all of the TRs were ready extremely early. And with the delay, it meant that clients, I mean, they're familiar with the process anyway. They've gone through EMEA. They have their TR connectivity. You've then moved to an ISO standard, so you've got standardization around the reporting. And actually, I think you can't underestimate the importance of the working groups, the way that as a community we came together, led with the likes of ICMA, ISLA, and actually established best practice. So, as they say, touch wood, but things have gone extremely smoothly. I think the only thing that you'd probably say was lower would be things like the pairing rate. But then you'd expect that because obviously it's a phased approach. So initially you're seeing a lot of one-sided trades.
Okay, so that leads me basically to the next question, and that's for Nicolas Larieux. So what do you think were the most important factors that the Go Live went that well? I mean, that takes a little bit up with the first things that Catherine and Nick said.
We've stolen all the thunder is what you're saying.
Yeah. Is Nicolas still with us?
I think I saw Nicolas drop off.
Okay, so well, maybe the other Nick, you want to take over? Well, you already said that the association and market participants were pretty much involved in that, and also on the vendor side, as you know, that we're also offering SFTR reporting. We think that also the vendor interaction was quite important. But do you have any other points that you would like to raise here? So Nicolas, sorry, we just skipped your question and shifted it over, but you have a few afterwards, okay?
Sorry, yes, it's best laid plans and all of that. But yeah, look, I do think we covered most of it, but I do think the role of vendors as well is important, because what you've seen is that a lot of people have outsourced, whether it's through delegation or whether it's through the use of vendors, to ensure the consistency and also to future-proof reporting as they go through. And I think that's reflected when you look at, as Catherine said, you look at the rejection rates. I mean, the numbers that we're talking about have been, been exceptional. And I just think the market was extremely well prepared for this. They were quite a way along in their project plans. And, it's testament, actually, I think, to the way that the community has worked together and has actually led this at quite an early stage, because this has all happened in a COVID environment when everyone is working remotely. It's quite incredible.
Yeah. Nicolas, do you have any thoughts on it to add?
Yeah, I think I'd echo the same sentiments that have been shared already. The high ACK rates, I think pairing and matching rates that that EMEA has taken years to achieve, being achieved now. I think really the emphasis on kind of that preparation and planning has been the major contributing factor to an incredibly successful go live for all of the phases so far. Long may that continue.
Okay.
I know that we've, sorry.
Yeah, Catherine, please.
I know that we've mentioned it, but the rise of the vendors was actually really quite interesting. It's not something that we saw happen in EMEA and MIFIR in the same way. We were finding that firms are going to vendors first and selecting their vendors and then choosing the repository at a later stage. And that's just never happened. Firms have always sort of gravitated towards choosing the repository first. And I think that just shows how much technological advancement we've had as well. We are in a COVID world where things have changed fundamentally, and firms are looking at what they can achieve using a variety of different applications. And actually the vendors have come together to, some of them have grouped up to be able to offer really, really good and very and very encompassing solutions to really assist firms in this space. And I think all of that's had a really positive impact in what we've seen in the reporting.
Yeah, I think the proof for this is the next panel session that we have, where exactly those vendors are, let's say, give a testimonial about their success story in SFTR, which is, I think, very interesting to see. Okay, Nick, beside the fact that everything worked pretty smoothly, did you see any change or any drop of data quality when the buy-side firms went live last month, or was that exactly as smooth as for the sell-side firms?
Yeah, look, Catherine actually mentioned this when she opened up. We saw no change at all. When you saw the buy side coming in, I mean, a number of the buy side had started reporting at RSD anyway. So these guys had gone in at the initial phase. What you've seen as well is they were well prepared. So there wasn't a drop off. If anything, as well, you're seeing across that community that a lot of them are delegating the reporting where they can. Obviously, things like collateral reinvestment, they can't. So there is an element of self-reporting. But there is a lot of delegated reporting. So I think the data quality itself has been exceptionally strong. I suppose the question will we see that model change actually in the future? So a lot of the buy-side clients that I speak to that I know move to delegated reporting. It wasn't actually their initial intention, but given the stage of where we are, project plans had to be suspended. So a number of them actually moved to delegated reporting. And it's something that they're probably going to be looking at later stage, a little bit like we saw in EMEA, where when you start getting the NCAs looking at the quality of the data that's being reported, and obviously targeting the guys that are delegating, the fact that they need to demonstrate oversight and control of the data that's being reported on their behalf, you may see a change in that model. But at the moment, I haven't really seen any real impact at all. And yeah, they had the opportunity, the ones that did wait until phase, I've got to keep remembering it's called phase 3, even though it's effectively the second phase. But they did have the opportunity to learn from what happened at initial go live as well. So we were working closely with that community. So no, it's gone well.
Okay, Nicholas, any thoughts?
Yeah, I think it feels to me that the stage of planning or the planning stages has kind of really been moved up and earlier, and I think that's enabled people to really kind of take advantage and see how kind of those earlier phases or the earlier phase went with kind of relatively minimal impact in terms of kind of that data quality. You know, Catherine already said that the high ACK rates, up high 90s. But I think having that time to prepare, you know, the delay and by the regulators for phase 1, obviously, I think has helped everybody take a little bit more time, do some more testing. That's obviously had knock-on effects downstream, so that kind of when the other side of the trade came on, the data quality was better than probably many of us feared, expected, hoped. So I think it kind of all leads itself to what has been a very, very successful first 2 phases.
Catherine, from your side, do you share that view?
Yeah, so I think for the buy side, we've definitely seen a real range in firms that have different technical capabilities. There are some very small firms who would have historically have really struggled to generate things like the XML, which is really quite complex. But actually, you know, because of the extension, because of the time given for the buy side to have a bit longer, and actually because of the different vendor solutions and the repository solutions that mean that, you know, you can get assistance where you need it, I think we have seen a very smooth go live. I think it's given enough time for the buy side to be able to be ready. And I think all of that has been incredibly positive. We haven't really seen much change in the data quality. I think the acceptance rate was the same for the phase 3 go live as it has been throughout, from the phase 1 and 2 combined all the way to now. It'll be interesting to see if that perpetuates over the non-financials that become reportable in January. But we are still seeing a lot of engagement and firms, you know, really talking about anything that they're finding and working through any issues. So I don't really see that there will be any changes in the data quality that we are getting. One of the interesting things about delegating, though, is you always say You can delegate the action of reporting, but not the obligations. The firms who are delegating really do need to make sure that they have their controls in place, because it's really key to know that you have reported all of your data and that your data is of good quality and that you understand what's reported on your behalf, because you cannot delegate your obligation, which means if there is an issue and an investigation, that's still your responsibility to manage.
Okay. Well, I think under EMEA we had a pretty similar approach at the very beginning, so that the buy-side firms more or less delegated their reporting. And over time, as you said, Catherine, that people could not delegate the responsibility, we saw a little bit the opposite way around, that they began to report themselves because they figured out that they have some problems in delegating to too much counterparties. I think the situation under SFTR is a little bit different, that most of the buy-side firms are trading not with a whole lot of financial counterparties. So do you see that as well, or do you think it will be the same as EMEA, that at a certain point in time they will just step back and say, okay, we're going to take over the reporting responsibility? Maybe Nick, do you have any view? Nicolas Larieux, sorry, it's very complicated having two Nicholas on the same panel.
It's fine. It enables me to just defer everything to Mr. Brown. Look, I think realistically, the kind of the appetite to do it yourself, I think, will vary from firm to firm. And I think, you know, again, to Catherine's point about the technology and Nick's point about technology, you know, there's a lot of technology out there to support clients with their reporting, whether that's through the kind of the transformation in terms of the schemas, whether that's through reconciliation when you're kind of delegating. So I think there's a lot of technology out there to support clients, whatever model they choose. I think, you know, DTCC introduced a pre-reporting module to help people convert the schemas, as I'm sure both of our counterparts on this panel also have, right? But I think that was something that the industry has kind of has really kind of stepped up on, in terms of providing that additional tooling to help people, all shapes and sizes, get data in, get data out, reconcile, and kind of meet that regulatory obligation. So it's been, I think that's come on leaps and bounds, and I think it's certainly possibly one of the lessons learned from the war wounds, the battle scars of EMEA in particular.
Okay. Any thoughts? The other Nick? About
yeah, look, I think we're all agreeing with each other. It's a real love in here because we're all saying the same things, and I think, you know, what we're looking at, it will depend if we see change in the future. It will depend on from counterparty to counterparty, you know, in terms of the size of their activity, the number of counterparties they're dealing with. And actually, when we look at the landscape at the moment, volumes have been low. There's one thing probably we haven't mentioned, is that the volumes that we've seen being reported today are actually extremely low compared to expectations. And there's various reasons for that. You know, the removal of the need to backload data, the fact that actually just market conditions means that there's not as many SFTs being traded as maybe previous times. So, you know, I think it's one of those where everything at the moment has gone extremely well. And, well, you know, when we come to delegating, I think it makes sense for the parties that have done it at this juncture. But that may change as the landscape changes. And I think it's a watching brief just to see what the impact will be when we see those volumes start creeping up.
Okay, thanks, Nick. Well, maybe let's just move to the next question, because it's some way related as well, obviously. So I think we all agree that the go live went pretty well for all two phases that we have seen right now. We have experienced exactly the same with our clients. Although I have to say that in the very beginning it was pretty complicated as well to educate people on how they need to report collateral, for example, which is very different from what we have seen from other reporting regimes. So, but despite the fact that everything went pretty well, I guess there are still some elements which need some fine tuning. Catherine, what are those elements in your opinion?
This is a very challenging question. So there are definitely some things, some ongoing challenges that I think some firms have faced. One of those that has been quite broadly discussed in the industry is, for instance, the LEI of issuer. I mean, if you're trading on an EU issuer, then you need to have an LEI, but not all EU issuers do. But we have seen the uptake of the LEI really increase. But it's kind of led to a question actually that, is some of the reason that we see less volume because firms aren't reporting certain trades because they don't have an issuer with an LEI? Or is that assumption valid, or is that something that isn't really occurring in the marketplace? So we are doing some investigations into the data that we're seeing. I think it's quite sort of broadly discussed as well that there are some challenges in the XML, and we are hoping for some updates in the future that will assist with the reconciliation, especially, which needs a change in one of the schema structures. So I think there's definitely more to come. I believe that we will see this evolve. There is a place in the regulation that means this will be reviewed. And I think we can see once all of the phases of reporting and the reporting is stabilized, there will be some changes. It's not been very broadly discussed, but there are consultations, for instance, for the trade repositories to do extra features like position calculations. So I think the amount of data we'll be seeing in the industry, the amount of data that the TRs have to provide is going to increase. And that extra data is just going to result in more oversight and more understanding of the market as a whole. I think as we understand the market more and we start looking at more market trends, then that will naturally gravitate towards changes in the future. But I don't think anything's on the near horizon.
Nick, Bruce, what are your thoughts? Do you have anything, what needs to still be fine-tuned in the reports?
Yeah, look, I guess what I'd say is, like with any new regulation, it's never perfect from the start. And as you go into a live environment, there's always going to be differences between the way the regulation is set out and how actually it's applied in practice. We know from the working groups as well that there was still some areas around the ISO messages, things like the use of the negative signs, etc., that hadn't been fully addressed. So I think what you will see is that I'm not going to start using phrases like refit or anything like that, but you are going to see slight changes as well to things like the ISO, the ISO standards. So we're going to see some tweaks as well as you go along, as you'd expect with any regulation. So I think those are the things that I would just highlight on top of what Catherine said.
Okay, maybe another point which is very interesting, especially for those who just recently started to report, is obviously Brexit. I know that everybody tries to avoid that topic, but I think just 2 months before the potential no-deal Brexit, we have to talk about this topic. So, Nicholas, Larry, do you have any thoughts on how Brexit will impact SFTR reporting and maybe reporting in general?
Sorry, my internet's just about to crash. No, joking aside. I think we get this question a lot, right? And I think the key thing is, irrespective of deal or no deal, we're likely to see divergence after Brexit. We've already seen that with the NFCs being no longer being required to report under the FCA. And I think that gives us a fairly good indication of the FCA's position on who they expect to take responsibility or the burden of trade reporting, and the relative importance of the NFCs when it comes to systemic risk. I think there's again, inevitably there's more changes, additional trade repositories required, and that in itself throws up its challenges. Luckily at DTCC, or I say luckily for me, we are going to be offering both the EU and the FCA trade repositories for EMIR and SFTR, for the FCA equivalent as well. I think the inter-TR reconciliation won't occur between UK reported trades and the EU 27 because they're separate regulations. But I think with that said, I think there's also going to be kind of similarities when it comes to updates for SFTR generally next year, where both regulators may take kind of a practical alignment in terms of rules and schema changes. So I think those are the key things that we see and that we hear. We're already deep in discussions with a lot of firms around making sure that they're documented and are onboarding to be able to support both or whichever is applicable to the particular firm and their clients.
Okay, Catherine, any thoughts about it on your side?
I've always got lots of thoughts. Yes, so Brexit's been quite an interesting conversation, and a lot of people do err away from it, I guess, and playing on the side of caution. But I guess it's something that we need to really consider, because there will be a large number of firms that not only have a UK reporting obligation, but that same record can also be EU reportable because of the branch reporting obligations. So this is much broader than just UK firms. It's any UK firms or global firms with a UK branch where they're committed in that trade to their books and records. So yes, I think it is going to be interesting. It will be a slightly different landscape. I believe the FCA have published the repositories that are applying, and it's DTC and ourselves. So there is only the 2 repositories to go into. What that's going to look like for reconciliation will be something that we'll have to look into and we'll have to monitor. The UK repositories won't be reconciling with European repositories. So for Europe, we'll start seeing more reports will be only one party has a reporting obligation, and that's probably quite likely in the UK as well. So I think there'll be less reconcilable reports between the 2 regulations. I think firms have been engaged, and they have been engaging about it, and we've had a number of conversations about how does this affect the carve out for SFTR, where reports are actually reported under MiFIR rather than SFTR, because the Bank of England's no longer a central bank for Europe. So actually that changes, the eligibility criteria of what is reportable in SFTR. So there's definitely been some changes, but we've been, at the front of that conversation with our clients and really working through what this will look like in a go live situation. And we do have a number of ancillary products that we offer to firms to really help them with this.
Okay, Nicholas, Bruce, any thoughts on your side?
Yeah, I know, quite extensive answers there already. Sorry, I'm getting slightly distracted because my dog is barking at the back door because he wants to be let in. So this is modern world problems going on here. So apologies for any background noise. But look, I think that's key with Brexit. It's quite simply, when you look at the UK, it's going to have third country status. When you look at the UK and the reporting regimes, they're no longer the same reporting regimes. They're completely separate regimes. That's the way they need to look at. As Nick said, you're going to see divergence. So the reporting criteria, whilst that might not be substantial, it will change. And, where you've got trading between the UK and an EU counterparties, then those trades effectively from both sides, they're one-sided. So they will not match, they will not pair. And that's really what participants have got to be ready for. I think in terms of preparation, I think everyone's just blowing the dust off of all the previous Brexit plans. I know SFTR now is in scope, which wasn't previously. So I think a lot of all the market participants are well versed with it. So I think we're there. I think one of the challenges I've got, and I'm sure Catherine and Nick have got as well, is we've done all the planning with our clients. Now with CME Next Abide winding up their EU or European operations, we've now got a whole new suite of clients that we've got to go through the process with again. So that's just an additional consideration we're probably all having to manage.
Okay, so the fact that there's no reconciliation between both regimes might make things actually easier for the market participants. The question for me is, will that remain as it is, or will the FCA and ESMA start at a certain point in time to discuss and to actually exchange data? Well, maybe our last question before we come to the questions from the Q&A, because we received some. What are basically the next big things that keep you busy in the upcoming weeks and months? Maybe Nicholas, Bruce, you take that up, and all the others can obviously comment because it might not.
Yeah. Okay, no, glad to. What's the things on the immediate agenda? I think facing another lockdown, just away from SFTR, things like letting the dog in, all of these kind of challenges. Look, we've talked about the fact we've got Brexit coming up. SFTR hasn't finished, so we've got the final phase as well. What else? if we also look at the regulatory landscape, I think I'm the old man here, but I'm the newbie when it comes probably coming into the TR world. And I think we've had almost like a tsunami of regulation, whether it's updates of regulation, new regulation coming out. Now, whilst there is still new regulation coming up, we've got things like EMIR refit coming in the future. We will have divergence and updates to things like SFTR. It does seem to me, and maybe this is just blind hope on my side, that we're coming to a period where hopefully it's going to be relatively stable. From my perspective, what that hopefully means is that we can actually step away from sort of focusing on regulatory change and actually looking at the client agenda. So looking at things like, for me, enhanced reporting, looking at our online portal, and actually putting some of the investment and more of the focus there. And one other thing in Regis is we're actually 10 years old in December, so we've got a whole host of planning going on around that. But it won't be what traditionally I would have set up, which would be, as I would say, a good old knees up, where we'd have all gone down the pub, nice client event. So we obviously have to do that in a COVID-friendly way.
Catherine, what about Univista?
Yeah, so I think, what's going to be on the agenda primarily for us and for firms is first and foremost is Brexit. So the ongoing support of firms as they start going through their analysis of the reconciliation results that they're getting and deep diving into that. Support of Brexit, which is taking place at the end of the year. The last day in December is the end of the transition period. Even if there is a deal, interestingly enough, I don't think we discussed it, that doesn't mean that there will only be one reporting obligation. There needs to be an agreement between Europe and the UK for equivalence for that to take place, which we don't think is going to be in place by December because it's a long regulatory process that needs to be undertaken. So I think some firms who are relying on that will need to really have a look at their Brexit plans. Then we have January with the phase 4 reporting in Europe, but they aren't reportable in the UK. And then I think, throughout the course of next year, it's really having a look at, the best client features that we can deliver, the best value that we can offer to firms. We want to undertake some extra ancillary products to really start giving clients value back. So it's not just a case of I have a burden of reporting, it's actually what value can I get from sending these reports to the repository and centralizing all of that data in one location. So having both the UK and European data, there's more that we can do with those data sets, and we'll expand that out across our product bases.
Nicholas, any thoughts from DTCC side?
Yeah, I think the key thing here is that the regulatory agenda shows no sign really of abating. I think we're kind of 7 years on from EMIR, and there's still changes happening. So I think coping with whatever gets thrown up next year, whether it's changes to SFTR, whether it's changes to EMIR, whatever it may be, Brexit, it's all part and parcel of our kind of evolution, I think. I think interestingly for us though, I think it's the client agenda. How can we help clients? So exciting news we released recently is our expansion of our consultancy services business. So looking at how we can help clients really kind of look at their infrastructure, their architectures, to make the best and most efficient use of our products, but also then those technologies that link into the trade repository. And I think for us, if you look out into 2021, 22, the kind of the North American regulatory change agenda is pretty packed. So being able to support clients from that perspective as well, leveraging some of our newer tools and services to help clients meet those challenges and overcome some of the pressures, in particular around cost in the regulatory space and risk. And it's certainly something that we hear and see from clients, is that there's a kind of a real requirement to kind of streamline what they're doing when it comes to regulatory reporting, whether it's through rationalization of service providers, whether it's through enhancements to how they do things and what they're doing. So yeah, I think it's really kind of focusing on the client change agenda and understanding how we can support them through that in the coming kind of 12, 18 months.
Okay, thank you. So we got a couple of questions. Well, I think the Brexit question was already answered. Maybe just in the course of looking at the time, maybe one of you can just voluntarily answer one question and then we go to the next one. So the first one is, if EMIR was a struggle, but SFTR was much smoother, does that mean that the industry has figured out the recipe to successfully take on these huge regulatory changes, for example, SFTR R2 or slash refit? Yeah,
I'm happy to kick that one off. I think, you know, we've all touched on it, and, you know, even kind of talked about it being a TR love fest here, right? But I just think the blueprint is almost the increase in collaboration and preparation. So rather than kind of kicking things down into the long grass until, you know, you're 3 months away from a regulatory go live, it's imperative that kind of all of that analysis and preparation is done much sooner. And, you know, as a technology vendor, we always want clients to do things sooner, right? But I think, you know, the end result kind of justifies the kind of real focus on that preparatory time to enable you to execute, right, on your plans. So I think that, and the collaboration, the industry associations, the overarching collaboration within the industry across all the actors, you know, even amongst the TRs, right? You see it here, but I think it's really kind of been the blueprint to the success.
Could I just add, don't forget that CSDR is still coming. We haven't touched on it. It is just on the horizon, and I know it's been postponed, but CSDR is still coming. So bear that in mind, collaboration and early engagement.
Okay, thanks. Well, Catherine, the next question is, I guess, more or less for you, because you mentioned the XML schema. It is mentioned, Catherine mentioned the XML schema. I understand that there are still some issues with the XML schema. Is this a significant problem for the reporting firms or TRs? What is ESMA doing about it? Have any?
So there are some nuances in the XML schema. I think anything that we found, we've fed back, and as a group of repositories, we've all fed back in through the ESMA process to say, you know, these are the things that we've identified. The negative value that we've mentioned in the TR schema, I think Nick mentioned it as well, means that some reports aren't reconciling where they may have reconciled, which is giving a slightly lower reconciliation rate. But that's not affecting firms sending to the data to the repositories. That's not affecting them meeting their reporting obligations. It just means that some of the statistics might be slightly artificially lower, just because there isn't a value in the schema that is needed to be supported for the purpose of reconciliation. So I don't think it's a critical thing. It's not, as I said, impeding on a firm's ability to meet their reporting obligation or impeding on the statistics that the regulator would see as a result of the reporting, but it may be increasing the number of breaks that we're seeing through the reconciliation process. And hopefully that will be updated through the course of next year, but we'll have to wait and see when that update's put through the ISO group.
Okay, maybe one last question. We could not answer all of these, just for everybody to know. So all of us are exhibitors to the conference. So for any further questions or whatever, do not hesitate to visit us on our booth, and we will also dispatch the questions between us, and we will answer them afterwards. Okay, but just maybe as a last question, how will the data TRs publish change? We're seeing the early data, but there seems to be a discrepancy between what the TRs are publishing, and when will pairing matching stats be made available? Maybe Nick Bruce from Registrar, do you have any views on this?
Well, I think my first view is I wish I'd offered myself for one of the earlier questions rather than that one, but that's an aside, I guess. Look, in terms of, and I've got to admit, I don't actually have that much visibility on when the data is reported and what's available on that side of things. But when we're looking at the data, I think we've already covered the fact when we're looking at sort of the pairing and the matching rates, that actually you're not really going to get a true picture of where we are until all of the various tranches or phases have gone live for a start. So I think we've got to be careful with looking at some of the data and actually interpreting it too soon. You know, as we're already seeing the changes, we're already seeing the increases as we go along. In terms of making it available, I don't think there's any particular restrictions in terms of making it available. It's just when it's useful, when it's actually meaningful and we can interpret it. Probably I've waffled around that question.
Can I?
Yeah, please.
We do all of the TRs publish public data, and the latest time that we have to do that's by Tuesday 12 noon, and including in that is the reconciliation values. So you'll be able to see each of the reconciliation information. I actually pull this every week, so I know like the industry rates, and I think that is something that firms are capable of doing. You just need to Google through, and all of the repositories publish that data weekly.
I knew Catherine would know that.
Yeah. Okay, well, I think we're running a little bit out of time, unfortunately. As I said, we're going to pick up the questions, and everybody is welcome to visit our booth. I think all of the participants are more than happy to answer bilateral questions. So, well, I can only say thank you to all of the participants, to the panelists especially, and take care and stay healthy. Thank you, everybody.
Yeah. Thanks, everyone.